How's it going, everyone? I hope that everybody's having a great day as well as a great week so far in your trading. This is Bruce Long. I am doing a video about portfolios. Now, I know not a lot of people actually ask me about this, but I thought that it was probably a little bit important to kind of do some discussions on portfolios because I get quite a lot of comments and emails just about portfolios from other people and it's always usually negative. Well, mostly comments, and I do emails. They say, well, he doesn't need a portfolio. I don't need a portfolio from him. I like what he's doing. I like to see, I see all the gains that he's given me or she's given me, et cetera, et cetera, et cetera. So my biggest thing here is that before I really get started into this video, I'm going to be showing you what I believe a bad portfolio looks like, and then what a good portfolio looks like, and we're gonna kind of examine those now. Sort of an announcement on this is that I will not be showing the good portfolio on who that actually is, and the only reason why I'm going to be hiding it is because A, I'm not trying to endorse this person, and B, I don't want you guys just following this person just because I said that it looked good or whatever, what have you, and then it turns out to be bad. I'm just showing you what I think looks good overall when you're looking for a portfolio, and then you can kind of investigate further by demoing it and so on and so forth. But before you even get into demoing or purchasing a system or following software, you know what to look for and what a bad portfolio looks like. So I know that a lot of people show you, another thing is, before I really get started into portfolios, is I want to talk about like screenshots on the MT4 mobile app. So a lot of people show you in the marketing world, they'll show you a lot of screenshots. Look at what I've got. I turned $100 into $1,200 in just a couple days, and stuff like this. And they show you screenshots, but they'll never tie that account to a portfolio on MyFX book. And so it's kind of interesting because I feel as if that these people are obviously trying to hide something. It's very, very easy to connect it. We're not looking for full verification. Just something to see the numbers, to see the graph. What did you risk? Do you have open trades that you're hiding? Whatever, what have you. Another thing that I want to talk about is, just because you see a person constantly showing wins, you're constantly seeing those blue numbers, doesn't mean that they're constantly winning. What a lot of people do in the marketing world is that they will have two different accounts. They'll have one account for selling constant sells, and they'll have another account for constant buys. Obviously, you have a 50-50 shot in being right. Either the market's going to go up or it's going to go down. And they do what the old time used to be called stoning, and they called it that because of binary options, and I won't get into that, but they basically was called stoning the market, where they're constantly placing a trade after trade after trade on the exact same asset, looking for the quote-unquote best price. Now, I don't agree with that type of methodology. It doesn't mean that it's right or wrong. I just don't think that's, what ends up happening is, I think that your mentality becomes, I'm looking for the best possible price, I'm looking for the peak or the bottom part of the price, and it just ends up being an emotional game, which is not what Forex is supposed to be about. So another thing is that I heard this. Now, I have not proven this to be right, though, but I found somebody had emailed me saying that it said, Bruce, you won't believe this, but I haven't proven this to be right, but I saw someone discussing it on Facebook, which was that most of these people have found a way to manipulate MT4's mobile app or the platform on the desktop into showing withdrawals when they actually have no withdrawals at all. And basically what they said that they do is they go to their broker and request a higher deposit on their demo account, and because they do that, it shows a withdrawal of that certain amount. This is why a lot of times you see withdrawals for like 10,000 even or 30,000 even. It's always an even number of 000. It's never, like $1,245.67. Like, it's never something really, really exact. It's always really, really to the point and precise. And I'm gonna have to go through that and see if that's actually legitimate or not. I'll need to go to a broker that I guess people use a lot and see if that's something that that can be done. And I'll show a video on that. Basically, another how easy is it to be fooled part 2. But another thing that I wanted to touch base on is on this video here, this gentleman, Darwin Lopez, I think. Maybe he's deleted. No, here it is. Darwin Lopez. He says, "You're a scam. You can't trade." And then he says, "Let's have a 20K trade-off." So what a lot of these marketeers love to do, and this is a person who endorses IML, and he used to be a person with Wake Up Now. If you don't know what Wake Up Now is just a marketer. That's all he is just a marketer. But looking into something like this, a lot of people love to do these trade-offs. Now, no trader does trade-offs. No trader does that. What they do is that they understand that trading is a long-term thing. It's not short-term. It's not something that, can be done overnight. It's not something that, you're trying to get the most money or the most pips out of a short period of time. It's nothing quite like that. So, when I see people wanting a trade-off, they obviously don't care about portfolio. They don't care about anything like that. All they care about is the pip count, and all they care about is the money being made. Now, again, this goes straight into the videos that I've talked about in the past when it comes with the Forex 101 and the ugly truth, and all of these videos that I talk about, when I kind of touch base on what the Forex industry is really all about, where this industry is based for you to go into this industry with pretty much a lot of money. A lot of you guys go into these accounts that are over leveraged. You're looking for 1 to 1,000 leverage because your leader's telling you to do so, and you're not. You're putting on more risk, and so you put like $500 in, thinking that you're supposed to be making thousands of dollars a day, and that's not how the Forex industry is supposed to be. You can do that, but not for a long period of time. You can't do that in the long term, which is what you should be looking for, is longevity in the market, not short term. So anyways, what the market's supposed to be really about is you put $10,000, $15,000, $30,000 and you grow that over time. You're not supposed to be withdrawing every single week and stuff like this. It's supposed to be a very long-term deal. And I'm going to show that in these portfolios. So going right into my FX book, I looked in, I put in IML because I've been seeing a lot of posts about IML, and because a lot of these numbers look really, really good until you really dissect it, and then you realize how really bad it is. But I want to go into, I believe one of these has the open trades, they're not hidden. See, as you can see, that some of these people they private the open trades. One of these does not have them private, so just give me a moment so I can find this real quick. If I have to pause the video to find it so you're not sitting here waiting, I will do so. But I wanted to open up, why I didn't open that one up specifically is because I saw a lot of different ones here. Let's see here. Yeah, let me pause the video and so I can find this real quick. Maybe they've deleted it. That wouldn't surprise me. But I don't think they have. It might be this one, if I'm not mistaken. I don't know why my FX book loves to they love to bring you right back into that main menu. Okay, here we go. Here's the open ones. Okay, so my apologies for waiting. So here we have this specific one. Now this is the real IML Optimus Prime. Now I guess Optimus Prime is a specific trader that you can follow. And as you can see, this trader is extremely high risk, okay? You can see that this line right here represents 0, okay? You have 0% on equity and balance. As you see, they started on June 29th. The gain is at 14.57%. But the equity is at negative 679. So what that basically means is that this 1600 pips is gone. It's pretty much wiped out already. Now this hasn't even been a month yet, and this has already been wiped out. What I want you to really pay attention to on this portfolio is this big gap between the red line and the yellow line, the balance and the equity. What this means is what I like to call a stay and pray type of portfolio or type of trader. They love to stay in the market, as you can see, and they wait for these things to turn around in their favor. So let me click on this USD/JPY, this trade here, load up the graph so you can see exactly what this trader is actually doing. He's down 336.9 pips on just this trade alone. And basically, this is what I love about my FX book, is that you can see exactly where this person took the trade and what they were looking for. So as you can see here, in that dialog box, you have no stop loss and no take profit. I think all of these trades are that way. Not a single one of these are people, this is obviously a person who's trying to scalp the market, but he's staying and praying in hopes that the market will turn around. As you can see, he bought here. he bought here and he bought here, and it looks like one of the trades has finally closed out. I actually had to redo this video, but I see here that he used to have 4, but now he has only 3. But you see that these are all just sitting here. These are just open trades. And you can see that on this symbol here, if I do this in USDJPY, okay, so he has multiple open. He has now 5 open now. So again, this is a person who is just staying and praying into the market and hopes that the market will turn around for him. This is the type of stuff that you need to really stay away from. I mean, just you need to stay away from stuff like this. Going into every single one of these IML portfolios, if I go to like the 119, or let's go to the 195, because a lot of people will see this and say, you know, man, look, he got almost 200% only from March 29th, so only a few months away. And as you can see here, this trader was pretty conservative. It seemed like throughout all of April, all of May, he was very, very conservative until he started putting on the risk. And now you can see this person is at 195%, 6,000 pips, but now the equity is at 7.95%, which basically means that pretty much all of this is gone. So, you know, about 93%, about 92% of this is gone. And unfortunately, the open trades are privated. But you can see that he was very conservative, which is okay. You know, I mean, 1%, that's fine, no big deal. That's what, I mean, that's what you're supposed to be aiming for anyways, from what I like to think, is that if you can double account in a year, great. If you can double it in 2 years, that's great too. You know, you're not trying to double an account every single month like this person is. So this is a person who obviously, again, is staying and praying. As you can see, there's a huge gap between the growth and, the balance growth and the equity growth. And this is all through IML's portfolios. There's not a single one of these portfolios that actually looks decent, that actually looks good. And another big thing that you want to look at is the drawdown. You see that the drawdown is huge on some of these things. So again, this is another person. You have gaps within here. Obviously, you had an equity, my apologies, growth at 24.6, 137. This is how much risk they were putting into making this trade happen. It's just crazy. So you can see here they did a few withdrawals on here. But if I look through the pips, the worst trade was 286. The best trade was 48. So let's look at the risk over ruin here. As you can see, this thing is not long enough to be able to understand what the risk of ruin is at the moment. There's not enough trades yet, or maybe not just not enough trades, but there's not enough activity in the longevity to see what is actually going on with this account here. So what these marketers love to do is they love to show you this part with the with the red line with the balance growth. They love to show you the risk of ruin that hasn't even been updated yet, and so most of the time you can see if they have this infinity mark, it means that it's not really been updated. So. And they, most of the time they think that drawdown's not a big deal, but it is. It's a huge deal. So these people who want to do these trade-offs, like they don't care about drawdown, they don't care about the risk, they don't care about any of this stuff. And some of these things are 72% drawdown. I mean, it's just crazy. 40% drawdown. It's just insane. So that type of stuff is what is really, really bad. Now, I'm going to flip over to another portfolio that looks good, but when you actually really deep down and go down into it, you realize that it's bad as well. So just give me a moment. Okay, so you can see here, this is another portfolio. Again, I'm going to be hiding what this one is because I don't want you guys following it. We all know who IML is, but I wanted to show you what that was about. But looking at this particular portfolio, you can see that this is a person who had put in what looks like $100,000. They've done 0 withdrawals. They have 133%. This is from 2013, mind you, okay? So this is a long period of time. But you can see, again, this gap, this huge gap that is 133% on balance growth and then 108% equity growth. And you can see all of these open trades. So he's negative total 9,148 pips in the negative at the current moment. And he's got a total of this year at 10,000 pips. So basically almost all of this is gone because if he were to close out all these trades right now. So again, this is another person staying prey mentality. If we open this one up, he's had this trade open since the beginning of the year. He's had it open for months and it's still not been closed yet. So hopefully this will load up here in a moment. And let's just look to see exactly what this looks like. This is where market is right now. This is where that sell was. Look at all these sells that are open. I mean, you'd be waiting forever for these things to turn around. So again, not such a good portfolio. Seeing this gap right here is what is so crucial in understanding. And you see that the drawdown isn't really that bad. We can go into the risk of ruin, and it doesn't look so bad. But you see, again, this is another person who is just really, really risky. He's a stay and pray trader. Now, here's another one that I'm going to show that what I think to be is what is pretty good. Okay, so this is another trader here. This is February 25th, 2016. Now again, drawdown is only at 13%. This is what seems to be pretty active, but it looks like all of July of this month they have not been active. $5,000 deposit, no withdrawals, and you can see that the risk of ruin is pretty good. You can see that the open trades unfortunately are private, but you can see the history here. This is obviously a person who kind of likes to scalp, I think, a lot. But you see again that he has a lot of trades that are pretty big. But this is the one big thing that I want to show you guys. Now, a lot of people believe that when it comes to risk management or money management, you'll hear a lot of marketers say, well, as long as you win 8 out of 10 trades, that's all that matters. That is not the case, okay? So that's really not the case. You can see that this person is profitable. He's been, they've been trading since 2016 to February, and they've gained about 133, I think it was, 134%. And, a lot of people in the marketing world would think like, man, that's a really bad portfolio. That's so bad. But you see that they have a pretty good profit factor here. What's interesting is that the best trade overpowers the worst trade, which is great. But you see that the best pips does not overpower the worst, and the average win does not overpower the average loss. So why is it that this person has a pretty good portfolio here? I mean, you can see that there was one point where they had sort of what looks like a stay and pray moment, but not really, because you see that 73%, 69%. So it wasn't even really that big of a gap. You have again 41%. 45%. So it's really not these huge gaps that you'll see with a lot of these other people. But again, this shows you a trader that is able to be profitable even though the average loss overpowers the average win. So you can see that on the monthly gain you have. Let's just look at the pips rather than just the percentage of change. So again, you see that this person has gained 3,200 pips here and lost here, but this is what I have been telling you guys from the very get-go, is that even professionals will lose on average 3 months out of the year. Again, this person came in, only missed January from what I can see here, and lost 4 months out of the year. That's pretty average. Yeah, January, February, March, April, May, June, does not have July, but has lost only 1 month out of the 6 month, 5 months that he's, 6 months that he's traded. So he's staying on the average of what is the realistic data that you hear about and that you read about, and that is the truth. So this is what I like to see in a portfolio. This is what you want to see in a portfolio. Don't follow these people who have portfolios that are only like a couple months long. I mean, looking at this person, again, the Optimus Prime, like it's only been active for a month, and that's it. It hasn't even been traded. It hasn't even been traded for that long. So these are people that you do not want to follow. I really can't stress that enough. You guys, when you're trying to find somebody, ask for that portfolio. Let it be at least, from what I like to think, 6 to 8 months at least. If they've been in this business for as long as they say they have, they should have a portfolio if they're trying to sell you a product. If they can't show you that, then they haven't been trading, in my own personal opinion, or they've just been busting accounts. So I want you to understand again, and I'm going to say this and repeat this because maybe you're new to this channel and this will be the first video you watch, but understand that there's a 90-90-90 rule. 90% of you guys traders will lose 90% of their account in 90 days. And that moves on to that 90% of traders will lose 100% of their account within 6 months. So that is the type of statistics that are out there. So you have a lot of these marketeers and a lot of these gurus, quote unquote gurus, that they think that they know what they're doing. They think they can trade, and they cannot show a portfolio, or they're constantly busting accounts, or they're constantly only showing wins. You know, a real trader would be happy for losses, not, you know, glad for losses, but be happy to show losses, because as long as they're profitable for the year, that's all that matters. In the longevity, that's all that matters. I've told you guys in my update video that, you know, I trade with people that are in Hong Kong. All of the Asian market, from what I have gathered, all they care about is the long term. They do not care about the monthly gains, the weekly gains, the daily gains, you know, the hourly gains. They don't care. All they care about is the yearly gains. Are you positive for the end of the year? Are you giving me more than my bank can give me if I keep it in the bank? Are you giving me more, or, you know, with less risk if I invested in something else? That's all you should be caring about, because true investors, if that's where you're wanting to head towards, is maybe having your own firm or taking on investors, that's all they're going to care about. Real investors are only going to care about that. They're not going to come to you every single week saying, you know, hey, why haven't you made 100% yet? Hey, why haven't you doubled my account? A real investor doesn't do that. You know, I've been in the client game before, and I know that a lot of clients and a lot of you guys think that this marketplace is a get rich quick. It is not. I know a lot of you guys will say that it's not, but deep down you think that it is. It is not. You know, again, that person that was making 3%, 2% a month, that's average. That is a person who what they typically make. I've read a statistic on this update video, the Forex 101, that talks about how, you know, people only pretty much outperform the market index by 1 to 1.5% at the end of the year. That's it. So, you know, you see a lot of these firms, they make about 1% a month, maybe 0.5% a month, and that's it. You know, these are people who trade Forex, maybe just Forex, or they add Forex into their portfolio because maybe they're trading, you know, they're day trading a lot of different instruments. But again, you know, do not follow these people who are making you think that you can just flip accounts, you know, constantly over and over and over. You may be able to do that one time, but doing that, let's see you do that every month for a year. Bet you cannot do that. And you won't see a trader ever do that, because eventually what these brokers will end up doing is B-booking you. If you don't know what B-booking is, look it up. That's what a lot of these brokers will do, because all these marketeers, they go to the brokers that allow B-booking. And why they allow it is because why the marketeers go to these brokers is because they're offering affiliate commissioning based off of the spread, or they give you a CPA off of them, or whatever the case may be. I don't care about that. You know, if you want to make money off of traders because maybe you're letting them follow you or whatever, more power to you. It doesn't really bother me. But what bothers me is that people, you know, go to these brokers. There was a time where a lot of people were going to Forex Broker Incorporated, FBI, and you know, they were telling you guys to go into an account with 1 to 3,000 leverage. That's insane. And you know, and this was a broker that started not paying out people because they were flipping accounts too quick and all this sort of stuff, because it's easy to do if you have a stay and pray mentality and you just so happen to be right. You know, you can make a lot of money on a high leveraged account like that just being right once, but good luck getting that broker to give you that money, because they're going to say, "Oh no, you took advantage. You know, we're not giving you the money." So again, be weary of all of these things. Don't follow people who try to challenge people to trade-offs and stuff like that. That's a person who doesn't understand the art of trading at all. And don't follow people who can't show you a portfolio. You know, don't follow signals that, you know, and again, like, I'll talk about signal services in another video, but I mean, signal services in the Forex world are not easy to do. So people who are trying to give you signals, it's not the best option. You know, if you're wanting to get a trader's trades, just follow them, get them mirrored, connect their account to another with their account, but be sure to ask for that portfolio. Ask for 6 to 8 month portfolio. If they cannot provide that, just walk away. It's not worth it. So again, I hope that you guys have a great rest of your week. If you have any questions, please don't hesitate to ask them in the comment section, and always, always, always stay safe.